We turn now to an amazing series of investigative reports from the nonprofit journalism group ProPublica, documenting how some of America's super rich have been able to avoid paying taxes for years. Rhonda?
And it comes on the very week that most of us have had to file our tax returns and send a check to the IRS.
We're joined now by Paul Kiel, a reporter at ProPublica, part of the 10-person team which used old-fashioned shoe leather reporting, excellent sources, and some incredible documents to reveal just how America's super wealthy have been able to pretty much avoid the taxman. Paul, thanks for being here. What, in a sense, did you find bottom line about America's super rich?
Well, the thing that really struck us was that how little they pay, particularly when you compare to how much they're worth. That is the thing that was the first thing we noticed, and then took real pains to explain to people, how that is possible.
But it's all legal?
There are some lines there's some blurry lines. In the tax world, they talk about aggressive tax planning. We saw some aggressive tax planning. One example is Peter Thiel, billionaire, was able to amass $5 billion in a Roth IRA account.
A retirement account designed for the middle class is now also a tax-free piggy bank for some of the wealthiest Americans. How? Turning a Roth IRA into a giant tax shelter. First, here's how a Roth works. You invest a limited amount of money each year, and once the money is in the account, it's never taxed again, as long as you don't withdraw it before age 59 and a half. Here's an example. In 1999, before he became a billionaire, PayPal founder Peter Thiel had a Roth IRA worth less than $2,000. 20 years later, his Roth had grown to more than $5 billion, the biggest account we found. He won't have to pay tax on a penny of that, and he can start to collect tax-free 6 years from now.
That was something that was a gray line that he might have crossed. But a lot of this, it's just the way that our tax system is set up. It's not set up to tax wealth. It's set up to tax a specific definition of income.
How about some of the super rich, like Michael Bloomberg?
Yeah, Bloomberg really came across as paying a remarkably low tax rate. So around an average of 4%. A lot of that has to do with deductions he's able to take. He gives a lot of charitable deductions. And then there's just deductions in our tax code that he's able to write off a lot of his income.
And Jeff Bezos of Amazon?
So, Bezos struck us as someone who has been largely successful in not, he's massively wealthy based on his holdings in Amazon, but for the large part, he's avoided turning that into the sort of income that ends up on a tax returns.
Today was also tax day, or as Jeff Bezos calls it, no, it's not. Now, if you procrastinate on your taxes, you're not alone. As of last week, 40% of this year's taxpayers were still unaccounted for, with many scrambling to submit their documents today. In fact, Google's top search term today was, what is 1099, how to get face transplant and move to Mexico tonight?
Jeff Bezos is so good at hiding his wealth that he qualified for a child tax credit. This dude built his own rocket to take him to space. And the US government is like, hey, brother, here's something for the kids until you can get back on your feet. Hard times, Jeff.
So one key stat for him is over the time period 2014 to 2018, he grew $100 billion richer and managed to only pay about $1 billion in tax during that time, which is a rate of about 1%.
1%. And the average American pays what percent? Those who get their money through W-2s.
Right. So we give examples of even someone earning like $45,000 a year who earns all their money through their wages can end up paying, if you include both income tax and payroll taxes, around 20%.
In your headline, you say, if you're getting a W-2, you're a sucker. What do you mean by that?
I mean, because for normal people, what your income is not really much of a question. It's a sort of an obvious thing to ask, and you get a piece of paper every year that says what your income was. But what income is to the wealthy is a much more flexible thing, I guess I would say. And so, like the example of Bezos, you can control what you turn into income. So you control, how much income you put in your tax return each year, essentially. And then there's a lot more opportunities to generate expenses, losses that can wipe out income on your tax returns. So we have examples of billionaires who end up with incomes on their tax return that have something like negative 400 million, for example. It's not a reflection of their actual situation. It's a reflection of what they're able to do through taxes.
Your team also took a deep dive looking at the billionaire owners of sports teams. Let's look at one of the graphics the team prepared.
This is billionaire Steve Ballmer. He owns the LA Clippers. He pays a way lower tax rate than millionaire LeBron James. He even pays a lower rate than Adelaide Avila, a stadium worker.
Peanuts! Get your peanuts here!
He's basically dunking on the tax system. Welcome to Planet Tax Avoidance. This is a magical place where sports team owners can tell the government they make tens or even hundreds of millions less than they actually do and pay very little in taxes. And it's all perfectly legal.
So, with the basic situation where if you own a sports team, there's this thing in the tax code. This is legal. It's the way it's set up. It was a break that they got put in. Even if the sports team's doing really well, earning a lot of money, you can deduct it. You can basically deduct the cost of buying it over time. So it generates massive tax losses, even for people who are making money off their teams. Meanwhile, their players, people like LeBron James, they're getting their compensation in the form of wages, which is taxed at the top rate. So they pay a far higher tax rate than the owners.
And the secretaries in the office, more than
right, secretaries in office. I think we give an example of someone who works in the stadium. They're just paying, they have a W-2, they're paying wages, they're paying income taxes, they're paying payroll taxes. It's all pretty straightforward.
So how was your team able to get the documents, which essentially show the taxes paid by some of these super rich Americans?
We obtained the information. It was sent to us. We spent a long time trying to verify it. And it was after we'd done years of coverage on the IRS and how it had been weakened by budget cuts. And it was a massive amount of data. It was a massive task just to organize it and then to make sense of it. And taxes, of course, are so complicated. So it was a real challenge and then to boil it down for people in a way they could understand it that was clear.
Well, your team did an amazing job of untangling all of that. Do you think any of this is going to lead to changes in the tax code?
Well, some things did come out of it. So I mentioned Peter Thiel and his massive Roth IRA. There was legislation on the Hill to deal with that. Some of these loss generating tactics, there was some legislation on the table. The problem is that nothing really is passing on the Hill right now. Biden had a proposal that would have taxed unrealized gains. So it would have gotten at this problem of people like Bezos not having income on their tax return. So there are solutions to this. There are solutions talked about this in DC, but in terms of it actually passing, what passes in DC these days? I don't know.
So as it stands now, some of those same tax breaks or most of those same tax breaks are still in law.
Nothing's really changed, unfortunately.
Well, you did a fantastic job. Hats off to you and your team for an amazing series of reports.
All right, thank you.
Up next, this week's winners and losers in the media. What's going on at Netflix? You're watching Brian Ross Investigates on the Law&Crime Trial Network. Time now for this week's winners and losers in the media, as chosen by the editors of Mediaite. And we're joined by Aidan McLaughlin, who's the editor-in-chief of Mediaite, which, like the Law&Crime Trial Network, is part of the Dan Abrams Media Group. And Aidan, you've chosen as your winner this week a changing in the guard at the New York Times, a new person in the top job, perhaps the most influential job in American journalism.
That's right. So for the first time in 8 years, we have a new top editor of the New York Times. His name is Joe Kahn, and he's a fairly unassuming presence at the Times. He's had an incredible career there, picked up 2 Pulitzer Prizes for his reporting, and served as a correspondent in Beijing for the paper, then its international editor, and then its managing editor for the past couple years, serving as number 2 under Dean Baquet, who has been executive editor of the New York Times for the past 8 years, steering the paper through astonishing growth and also several controversies. Now, Dean Baquet is 65 years old this year. That means that he's at the unofficial mandatory retirement age for New York Times executive editors. So Dean Baquet is going to be retiring as executive editor in June. He will be replaced by Joe Kahn, but he's not retiring entirely from the paper. A.G. Salzberger, who is the publisher of the New York Times, said that Dean Baquet is going to have a surprising, an exciting new role at the paper when he eventually allows Joe Kahn to take over in the top editor position.
And fair to say Joe Kahn is the old guard at the Times.
Yeah, I think that's really what the buzz has been this week about this appointment, is that Joe Kahn is a traditional Times editor. In fact, he's exactly what you would imagine an editor of an elite institution like the New York Times has always been. He went to Harvard. He got a job at the New York Times 25 years ago and worked his way up the ladder at the Times over the course of more than 2 decades. He's also the son of the co-founder of Staples. So he not only went to an elite school, served at an elite institution like the New York Times, he's also from considerable wealth. So this is a fairly traditional selection for the New York Times, which is interesting because of how much change the paper has gone through in the last decade.
And for a loser this week, you've chosen the top man at Netflix, Reed Hastings, who had to make some sobering announcements to his stockholders, sending the shares way down. Here's what he had to say.
Disney is going to be a global service, quite quickly. And there are many other global services. Remember that we compete a lot for time with YouTube. And it's not dollars because that's ad supported. But, we compete very broadly for viewing. And as Spence mentioned, our viewing on a per member basis is up.
They have not monetized 500 million viewers. I mean, what are they thinking? What are they thinking? That we won't watch an ad to see who wins in Squid Games? That they have these programs? Ozark? They could flood. I mean, the state of Missouri would probably run ads. They could sponsor it. But they're so uncreative and they're so dogmatic that they're their own. I mean, on the conference call, it was really sad because it was like, we thought we were doing well. We're not. Your sister's the fault. Your cousin. I blame your brother. Password.
So, Aidan, the long knives are out for Netflix and I guess for Mr. Hastings.
Yeah, that's true. So Reed Hastings, who has, heretofore been considered one of the most impenetrable CEOs of any company, and Netflix considered to be a true titan of streaming, announced this week that for the first time in more than a decade, they have actually lost subscribers. I have here the numbers. CNN reported that the company's stock had already dropped this year more than 40%. And it plummeted 35% on Wednesday morning, which wiped out $50 billion in market cap for Netflix. Now that stock plummeting is the result of the service losing 200,000 subscribers in the first quarter of 2022. Now that doesn't sound like a lot because the company has 221 million global subscribers, but it's actually fairly significant because it's the first time in 10 years that Netflix has regressed in its growth. This means a lot of different things for Netflix. It also means that Reed Hastings, who has said for years that he does not want advertising on his service, is reconsidering things like that. So it marks a big change for Netflix and a big change for streaming going forward.
So high-flying Netflix brought down to earth.
Yeah, brought down to earth considerably, and they're having to reconsider these things like advertising. They're probably going to be offering a cheaper version of Netflix that allows advertising on it. You'll be able to pay a premium to not have ads on Netflix. That's something that Reed Hastings never considered before previously. So it really shows how much the company is rattled by this news.
All right, thank you so much, Aidan McLaughlin, for being here, and thanks to all of you for joining us. That's our program for tonight. We'll see you back here again next week.